Since early September, the markets have been on fire with an active economic calendar, geopolitical tensions and elections. It's been a great time to be a trader and we've enjoyed being with you every step of the way. Now it's time to turn our attention to the topic of holiday trading. Hello, I'm Nick Quinn from the market analysis team here at ForexSignals.com, and this is your weekly markets preview for Monday, 21st of November 2022. The holiday trading season begins this Thursday with Thanksgiving Day in the US and ends Monday, January the 2nd, 2023. As a general rule, the holiday season can be a difficult time to trade. Limited participation and outside distractions frequently undermine trader performance. Don't succumb to any of these challenges. The key to being a profitable trader during this time of year is to stay focused and disciplined. There will be solid trade setups to capitalize on, so let's ensure that we are in a position to benefit from the action whilst not falling prey to the temptations and overindulgences that the holidays present. Holiday season or not, foreign exchanges, futures markets, stocks, bonds and crypto markets are open for business. So with that said in mind, let's dig into a few of the key events and asset classes to watch for the coming 5 days.
The 47th trading week of the year starts out with a fizzle. There's not a whole lot planned for Monday, but that doesn't mean there won't be much action. Remember, U.S. equities, commodities, typically we price that weekend news cycle. With this much geopolitical angst all around the globe, we don't know what we're going to get on a Monday morning in the Wall Street market. So when I'm looking at right here, I'm looking at the U.S. 100. I think this is going to be an active market for us on Monday. Maybe those traders try to rush for the door before they head out for their Thanksgiving Day holiday, and you want to definitely be looking at some key levels going in to Monday morning's trade. So for the U.S. 100, I'm looking firmly at a 38% retracement of a nice daily range, which you'll also see is your monthly range. We've got your monthly lows right back on November 4th, and now you're looking at your highs on the 15th. And right here, 38% of that's 11.525. Pretty darn good level, held up nicely late last week. We'll see if we get another shot at it again to the long side going into Monday's session. So could be an active Monday, even though there's not a whole lot on tap economic news-wise. Tuesday's a little bit more interesting, a little bit more populated there on the calendar. We have a big time number, let's see, out of Canada. You're going to see the core retail sales number come in. We're going to be expected to fall to 0.4% from 0.7%. In my view, it's going to be a modest market mover, even though it is listed as a key economic event. Do we get a pullback in the CAD or do we get a rally in the CAD? I think that either way, unless we see a huge miss in core retail sales, you're not going to see much of a move here in price action. Now, we're going to focus on the Aussie CAD for Tuesday, and the reason why is sometimes you want to limit your exposure instead of just trading the dollar CAD or the euro dollar or something like that. Sometimes you want to branch out and try to diversify your holdings into a different asset. The Aussie CAD is certainly that. It is a true commodity pair. The Australian dollar on one end, you're talking gold, copper, iron ore correlations, and then for the CAD, we're talking about crude oil correlations. So we might have an opportunity to get a unique trade as opposed to just trading that major that dollar CAD pair. So Aussie CAD, we've got really a nice compression pattern down here back late October. This is the weekly chart. You can see the big robust bull run early in November, gain of about 2% in a week, and we really did pretty good work last week as well, up about a 0.5%, 0.6%. So we're really looking for a pullback buy. We can't really ignore the bullish price action much longer. If we do get an opportunity down there at 88.55, that's 38%. So real similar to that US 100 buy. I think a buy from this level early in the week, not necessarily a bad play for a scalp or potentially a short-term position. As always, watch your risk, keep a close eye on risk. Now, Wednesday is our keynote. I would say that that's definitely our key day to focus on for the coming week. We've had a 3-part series, our New Zealand series. I hope you've enjoyed it. If you haven't seen it yet, get in the trading room, check it out. But this Kiwi ahead of the RBNZ, we're looking for a big time rate bump out of the Central Bank of New Zealand, and we think that potentially the Kiwi is going to be a fantastic carry trade for 2023. We're not quite getting ready to enter that recommendation just yet, but you can see that a lot of folks already are bidding this pair and really betting on that Kiwi moving forward. You have positive GDP growth, and you got an ultra hawkish central bank down there in New Zealand. So there's a lot of reasons to think that the Kiwi may be one of the first of the majors to recover against the dollar. And as you can see from our monthly chart, you've got a robust 2-month run up, really totaling over 9%, almost 10%. And right up here, we've got a 70 78% Fibonacci retracement right at 62, 63. I think that's a pretty darn good level, 62 and a half. Sort of the point of no return for the Kiwi. If we do see a robust price run above that zone, then we may be running at that swing high somewhere up around 65. So we're keeping a close eye on that. That's a big time session. Be sure to check out our 3-part series on New Zealand and the RBNZ in the trading room. Now, Ethereum. Thanksgiving Day, Thursday, marks observance of Thanksgiving Day holiday in the United States. Ethereum, why did I point that out? Because crypto's always open. It doesn't matter if it's Christmas, New Year's, Thanksgiving, whatever. You're going to have an opportunity to trade crypto if you decide to. And for me, when I look at Ether, I say, okay, what has happened over the past several months? Terra meltdown right here. We saw an epic crash, and we've really been range bound since then until the FTX crash, really the last, I would say, week or so, 8 days, 10 days. It's hard to believe that it's been just that brief of a time. We've seen a major correction in crypto, and we've seen really Ethereum threaten the bottom part of this long-term range. So to the downside, I'm looking at that panic, that really those COVID panic lows of 2020 all the way up to those all-time euphoric highs of fall of 2021. And my Fibonacci levels for that range are definitely 78% of the downside is about 1100, 1111, and then to the top side, our 62% is up there at 1915. And you can see we have just been trading in the dead center of that zone. So the real question for now for crypto traders is, do we break to the bear or to the bull? For me, I think this is a pretty doggone good support level. I would be looking to buy somewhere, just scalp trade, probably 1111, somewhere in there, 1115, 11 and a quarter to the top side. You can make a trade there and maybe stop yourself out underneath 1,000. If you wanted to be a more aggressive trader, you could look at June's lows, which are down there at about 880, put your stop loss under there and maybe play a reversion type of a play back towards 1500. So always remember, it doesn't matter what day of the year it is, 24/7, 365. Crypto's open and ready for trade. If you're looking for something to trade on Thanksgiving Day, Ethereum might be just for you. All right, and then we're going to wrap the week up with a collection of economic metrics out of Germany, the EU's largest economy. We've got German GDP due out. Now, basically, we've all been getting ready for 2023 for quite some time now. That's typically how the smart money moves. They start faceting, sort of start moving out of 2022 and into 2023 about 4 months ahead of time. Going into Q4, we're already thinking about Q1 2023. And for Germany, the GDP number could be key because we are guessing, and most analysts are guessing, to see a major economic slowdown, global economic slowdown in 2023. Well, the real question is where does it start and how deep does it go? Well, if we look at the EU's largest economy, Germany, we may get a hint on if we're already starting to see the tide turn. Maybe we're wrong. Maybe we're going to go bullish into 2023, or maybe it's worse than we thought. And these GDP figures coming out for Q3 out of Germany really tell the tale. You're looking for 1.1 expected, 1.1 previous on the year over year, and you're looking for 0.3 expected, 0.3 previous on the monthly number now, or the quarterly number, excuse me, for Q3. The biggest thing that I want to stress here, we are expecting no change in these numbers. That means if there's a change to the downside, we're instantly going to be talking recession and economic downturn. If we come in above expectations, we're going to say, hey, maybe we don't need to hike rates anymore. Maybe we have an opportunity here to instill growth and just let this thing progress naturally in a positive light towards 2023. So a big set of numbers out of Germany. I'm excited to see those for Friday. And our keynote market on Friday will be the German 30, the DAXI. And right here, this is fairly clear cut to me. When you take a look at the weekly price action, we've had really a robust run up since Monday the 3rd, and Monday, October 3rd, and then you're going all the way up through the 14th of November last week's trade. In any case, what have we seen? We've broken out above that upper Bollinger Band, which tells us that, hey, maybe a bullish breakout is coming. Maybe we are really going to make some hay to the top side of this market. So when I look at that, the first thing I decide to price is what? Big round numbers, very, very key. When you have a market that's breaking out, that's running into sort of uncharted territory, at least going back to earlier this year, we could definitely be looking at 14.5 as potential resistance, or looking at 15,000 as potential resistance. And quite frankly, if we were getting serious about trading this, we would be targeting this zone between 15,000 and 14.5 is maybe being a potential rotation zone. We'll see if price action does in fact dry up around 14.5, or if we do in fact reject 15,000 on the first attempt, and then maybe we can sort of get that ping pong and those rotational trades going forward. Do we get one of those on Friday? I think it's possible. If we see an early week break above 14.5, we may be able to do pullback buys from that zone, thinking it's going to be nice support. If we see a robust rally and just an absolute breakout, then maybe we can step up and short short 15,000. So there's a quick look at the coming 5 days on the markets. There's a few key markets and trade ideas in there for you. Plenty of analysis, sort of a slower week. We're getting into holiday trade. We're going to talk a lot more about holiday trade as the year progresses.
Holiday weeks are always a bit tricky to trade profitably. Why? The primary reason is that participation is sporadic and market depth is inconsistent. This can lead to wide bid and ask spreads, sudden swings in price, and enhanced slippage. To say the least, trading conditions are far from optimal for active traders. Nonetheless, that doesn't mean to say that there won't be opportunities to be had. If you execute your trading strategy with discipline and avoid becoming complacent, then it's possible to bank a few quid in, on, and around the holiday sessions. Be sure to check in with our trading room throughout the coming 5 days. We'll have full coverage of the key events, headlined by the RBNZ's interest rate decision on Wednesday. If nothing else, our team of analysts will have you ready to trade the Kiwi. Until then, trade well, and we'll see you in the next live stream.